Hey, how's it going, guys? This is the inaugural video of my series. I think I'm going to call it How Crypto Day Trading Works. Got to stay on brand. But Uncle Mark is going to show you how you can actually test strategies and actually do day trading. And yes, we do have coffee. So welcome, Gratitude Gang. A lot of you are going to be from the other channel. Some of you are just going to be random people, and that's fine too. Everybody's welcome. I will give you the reason for this channel. Believe me, as somebody who navigated this, almost all of crypto channels are BS. It's true. I am not trying to sell you anything. In fact, somebody who's trying to sell you a course or some special indicator or blah, 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 it's pretty much all fake. I don't know if literally all of it is fake, but it's pretty much all fake. Anybody that actually knows how to day trade, day trades. That's where they get their money for. They don't need your money. Like, it's just stupid. Maybe there's somebody out there, there's probably a couple people who are sort of altruistic and just want to help other people succeed or whatever, but that's nobody. that's basically nobody. I guess I'm doing this sort of for views, but it's also like we have a real community and a lot of people have expressed interest in crypto, so why not make some content for that? Plus, a lot of this stuff is just stuff I would be doing otherwise. So you might as well make videos, right? It's not that hard. So we figured out a bit of a system for doing that. And anyway, let me give you the 30,000 foot view. We are testing a strategy called the VAMP strategy. This is something I created about a year ago. This is not a strategy I'm currently doing. We'll just start off with basic stuff. You have to test strategies before you do them. Like, that may sound really obvious, but like 90 to 95% of people that try trading just lose money. That's a result that's been proven over and over and over and over again. And so I'm going to show you how to be 1 out of 20 people that actually does make money. Or at least doesn't lose your money, you know? We're not just going to be talking about this strategy. Eventually I want to get into how to develop strategies. But the servant is the father of the master. All mastery begins in servitude. That's what I was trying to think of. And this is servitude. You have to voluntarily put yourself in a position where you're just doing a bunch of work, okay? You're not going to be excellent at anything without the work. And so I'm showing you how to do the work, and we're going to make it fun, of course. But there is just an inherent boringness to this. In the same way that even a job you like is boring at times. Like, if you're an engineer and you love designing stuff, you're still designing hotels a lot of the time. Like, you're designing the next Hotel 6, Motel 6, whatever. And that's not that fun. It's not all stadiums for you, you know? In fact, you may never do a stadium. But that doesn't mean it's not worth it. Oh, man, I really need coffee. You're probably going to watch me drink a lot of coffee on this. Anyway, so here's the overview of the VAMP strategy. Like I said, it's a new one I'm testing. On the screens that are behind me, you can't see because I don't want to move the camera. I have 3 strategies like this that I've developed and I'm running. And this is a new one. I've only been testing it for about a year. What we're going to do, we're going to test this strategy across many different cryptos. And not just different cryptos, different time frames. A strategy, here's like a great nugget for you guys. A strategy that works across many different assets, many different cryptos in this case, and that works on different time frames is a good strategy. That's about all there is. to testing, to knowing whether a strategy is good. There's no certainty. The reason people fail at this is they're always trying to find a sure thing. They're always trying to make a quick buck. That doesn't exist. Just throw that out. And know that even if you do everything right, you could lose money. In fact, you probably will lose money because you probably won't do everything right. But you can get there. If incremental improvement is possible, then who knows where that ends up. All right, so let's talk about time frames. We won't, we'll take all the indicators off here because we'll explain those later. Do I want this on? I don't know. We'll figure that out later. All right, let's take the indicators off. These are indicators too, but I don't feel like taking them down. This is Solana. Solana is, at one point, it was the third biggest crypto of all time. And right now it's on the 2-hour time frame. What that means, each of these candles, you know, red candles, green candles, these guys, that represents 2 hours. Like right now we're on this one, and it's got an hour and 44 minutes, less than 44 minutes left. So what that will do, it's going up right now, as you can see. Eventually it will close, and that's when you get, you know, if it closed here, then it would be going up 0.71%, 0.72%. And yeah, it's green if it goes up, it's red if it goes down. We won't go into all the basic stuff, but, you know, that's obvious. I don't know what this is. Let's get this off. I don't care about key facts today. This is called a volume bar. It shows how many people bought and sold. You don't really even need to know how it works to do this, but it corresponds with this. You know, right now, this amount of people have bought and sold. Last 2-hour period, that many people sold and bought because it went down. There was more selling, obviously. So anyway, it's actually a little more complex than that, but we don't need to get into it. Let's talk about the actual VAMP strategy. So it's called VAMP because that's an acronym from some of the indicators involved, and I kind of forget what they are, but it sounds cool, so why not? Let's pick an easy one to explain first. So these are moving averages right here. Moving average is a pretty simple thing, actually. This is the 200 moving average, this purple one. This is the 50 moving average, this magenta one, burgundy, something like that. What that means, a 200 moving average is the average price of the last 200 candles. So if we wanted to do this manually, we would, let's do a measure thing here. We would go back 200 candles, and this is 54, 56. So you'd have to go back quite a bit. So that means this exact point is the average price of the last 200 candles. And the 50 moving average is the exact same thing, but with the past 50 candles. And as you can see, the magenta line is below the purple line here. And that means that on average, for the amount of time you're considering, price has gone down. So it's sort of an indication that price is going down. But you never ever base a strategy on one indicator. So we're gonna explain all these things. All right, let's do Bollinger Bands next. This is actually one that combines two. Bollinger Bands, it's trying to show the average range that price is likely to go. Another way of saying that is anytime a candle peaks out of the Bollinger Bands like this, that is an unusual thing. It means something unusual is going on. So in our strategy, what we're considering here is in a case of where it's pointing below the Bollinger Bands, these blue bands we're looking at, that means price is unusually low, or it has moved down an unusual amount. It is reduced in price unusually. So that means we might want to take a short. Anyone doesn't know, a short means you're shorting and you're expecting the price to go down in order to make money. Longing is the opposite, of course, means you're buying and then holding until it goes up in price. So we're doing both of those things. So an indication that you might want to short is when it's going below the Bollinger Bands. And this is not a 100% thing. You can see examples where it did work, like this right here. This closed below the Bollinger Band and it kept going down. So you theoretically could have made like 4% there. To put it in perspective, a good mutual fund might make 12% in a year. This happened in 2 hours. So that's why trading is amazing, if you're willing to be disciplined. And you have the same thing here. This peaked below the Bollinger Bands. That went down 5.11%, 5.11%. Now, obviously, there's all the devil in the details is when you sell, when you let go of your trade, all that kind of thing. But as you can see, that is a somewhat powerful indicator. So that's Bollinger Bands. Let's see here. This is yeah, we'll do the RSI overlay here. So this is a very simple thing. I can't quickly explain what RSI is. It means Relative Strength Index, and it's trying to indicate where the momentum is. If RSI is above 50, that means the momentum is to the upside. If RSI is below 50, that means momentum is to the downside, and you might consider a short. Normally it doesn't look like this, but because the chart is complicated, I got a special kind here. These yellow fields mean RSI is below 50. So if we'll go to the current price here. If your current price is in a yellow field like this, it means that short is likely the better option. And the opposite is true when there is just a normal black background like this. Longing might be the better option. Let me see. So let's go down here. This is on balance volume, and basically on balance volume is trying to interpret volume in a way that on balance it's either going up or going up or going down. So when this is red, it's more likely that price is going down in general. When this is green, it's more likely that price is going up in general. And as you can see, like, it did there, and it did here. It went down quite a bit. Went down quite a bit when this was red. Let's see, it did go up quite a bit when this was green, but then there are these little choppy parts where it's not such a great indication. So none of these are perfect, and none of these should be considered outside of their own context, let's say. Now this one at the bottom here is CCI. I forget exactly, it's something channel index. It's very simple. Basically, when you're above this line, that is an indication that you should go for a long. When you're below this line, it's a stronger indication that you should go for a short. You can kind of see where this is all going. When you start combining all of these indicators, it's like a council of wise men. Imagine they're all standing in a circle and there's 5 of them. And they all say, like, looks like price is going down. They're not going to be right all the time, but you don't have to be right all the time. You just have to be right more often than you're wrong. That's trading. That's what it is. And so basically what we do is there's one last thing. The last piece of this puzzle is, when do we consider a short? When do we consider a long? Like, what is the trade condition? What initiates the trade, or at least might? You have to have something that you're looking for that you think, okay, we're going to consider taking a trade here. What is that thing? It is our last piece. This is a good indicator from Lux Algo, which is a pretty cool company. It's a trend line break indicator. It's going to take a long time to explain what that is, but basically trend line breaks indicate that price may move in a drastic way. Again, not 100%, there's no 100% guaranteed thing, but yeah, when the trend line indicator prints a B that's green, a green B, that's an indication that price may go up, and as you can see it did here. We just got a red B indicator, and that means that price generally might go down. And you can see that there is a tendency to some extent for this to be true. So how this strategy is going to work when we actually trade it, we're going to get an alert or something that says a B has printed, and then we're going to consider whether we should take that trade. Now for the fun part. This is what it's all about right here. So we're considering 5 different possible factors. The first one's Bollinger Bands. We talked about that. This stands for on balance volume, CCI. This is the moving average cross. In this case, you want to maybe consider a trade. You want to consider a short when the magenta line is below the purple line, and vice versa. And the last one is SAR, which we haven't talked about yet. SAR means stop and reverse. It's trying to be an indication of when price reverses. And it's these dots, these green dots right here. So when you get a green dot after it's been red, that means price may be going up. And as you can see here, that did happen. And then we got red dots, which of course means the opposite. And price did go down quite a bit. Now you have examples where it doesn't work. You've got choppy things here. This is a red where price kind of went sideways and then eventually went up. And then price kind of went sideways. Price did go down a bit here. That's why you don't just base it off of one indicator, like I keep saying. So what you do here, we're going to go back through the historical data in the following method. We're just going to pick a random spot. So this is TradingView. It's the most popular trading platform, chart platform. And we're just going to pick a random place. I'm not considering where we're going at all. And what you can do, this is like going back in time, like a time machine. You can replay time one candle at a time. You can actually also make it go like this, but I like being more meticulous. So let's wait till we get a B. Alright, as you can see, we got a B. So let's figure out what the indicators are saying. So here, the magenta line is above the purple line, which is an indication that it might go up. So if we were recording this trade, first off, we put the date. We got to keep that straight. Yep, let's see here. So that would be the moving average cross, and we would put a 100 there. 100 means yes, 0 means no. As you can see, there are zeros here. So that would be a 100 for that. Now SAR is the dots, remember? And it's a little hard to see here, but there is a green dot underneath this candle. So that is an indication price may go up. And there you go, 100. Let's see what CCI says. That's this one here. So this would actually be a 0, because we can expand this. Let me remember how to do this. You can expand all these indicators if it's a little unclear. You can see that the blue line is below this line. It needs to be above it in order for it to be a positive, so that would be a 0. So we would put in 0 there, but I don't want to mess up this data here. On balance volume is green, but the thing you want with on balance volume is for it to have been red or been green for a long time. So we would put 100, but this parameter here is on balance first. It means, is it the first time that it's been green, or is it the first time that's been red? So that would technically be 100 if this was the trade we were recording. Bollinger Bands is the last one, and it is not above the Bollinger Bands. It is within them. So that would be a 0 if we were doing that. Like I said, this is something I already recorded, so I don't want to save over my progress. And that's what you do. That's the whole thing. There are a few more details. We'll get into the next video because this is probably long enough. But that essentially is what we're going to be doing. We're just going through the historical data and recording what happened. Now, one last thing to say here. In this data you're looking at, sometimes it says, sometimes all 5 agree. This would be the 5 wise men getting together and being like, yes, we all think you should buy this or short it. When it's yellow, that means only 4 out of the 5 wise men say yes. And we record the results of that. And after doing a bunch of this, we figure out whether 4 is enough, whether you only want to do 5, or orange, where only 3 out of the 5 agree. Now, as you can expect, it's better for all 5 wise men to agree, right? You know, clearly that's what you would want. But we're actually testing it. Like, who knows? It could be some of these indicators don't work, you know? That's the adventure of this. You don't know what's going to happen. Like, you're actually testing assumptions. This is basically a scientific kind of a thing. So yeah, this is an entire year of data. As you can see, these are the dates. This is 1, 22, 23. I didn't really write the dates very clear. That's 2, 3, 23. And of course, the last trade that was worth recording is 12, 24, 23. So Christmas Eve, 2023. One last thing to say, I don't record trades that less than 3 of the wise men agree on, because why would you? The majority disagree. So don't do it. The last thing that's worth saying here, this is volume pattern. And basically, let's say this was the trade we were considering. You would look at the last 3 volume bars, and what you want is an increase, each bar being higher than the last one. And this does fit that. Short, medium, large. That's a perfect volume pattern, and that would be recorded as green. Now, what is yellow? Let's find one here. This is a yellow. Yellow is medium, low, high. The point of that is it is generally increasing, but it's not as smooth, right? So that would be a yellow, and it doesn't matter what the other ones are because we don't take those. I guess we'll maybe explain it later, but what you're really looking for is yellows and greens. So once you collect all this data, you start looking like, what should I have done? And then you sort of test that. And then after doing that for a long time, you have a viable trading strategy. So you can make a lot doing this, and I have done quite well. Obviously, there's a reason I'm doing this. I have a business. I wouldn't be doing something else if it wasn't worth doing, especially that takes this much time. But we have tested this quite a bit so far. This is just one of the charts. So this is AVAX, Avalanche. This is Binance Coin, Bitcoin, of course, Classic. These are all on the 1 hour charts. These are the 2 hour charts, and we're considering a whole bunch of cryptos. So this is a map of all the cryptos we're testing a year's worth of data for. This is the 1 hour column. And for each of these colored in, that means we've tested a year's worth of data for each of those. This is the 2 hour chart. And this means we've tested a year's worth of data for each of those. Some of these colors we'll explain later, but basically these are all the cryptos that we are considering. So we have to do a year's worth of data for every single one of these cryptos in three time frames. 4 hour time frame, 2 hour time frame, and 1 hour time frame. So let's see how many this actually is. This is 25. So 25 times 3, you got 75 charts that we are going to look through an entire year worth of data for. And if at the end of that we find that this is profitable, that's when we're going to actually do the strategy. So it's a pretty big deal. I'll explain more, but this is your overview, and this is the mission of the channel. This is the entire point of doing it. This is stuff I've done. I've done this 3 times before. Entire, 75 charts with one entire year. Actually, one of them I did 2 years of data for every single crypto on every single time frame. You can see why nobody makes money in day trading, because nobody's willing to work this hard. I'm not here to tell you it's easy. This is not a get rich quick thing, but if you're willing to do the work, nothing can stop you. This is probably the hardest thing I've ever done in my life as far as business or money making, but there's a reason I'm willing to do this. It's rather obvious. You saw that you can make 3%, 4% in one trade. There's a bunch of factors we'll get into later. Think about being able to make the return a mutual fund makes in 1 year in a week. Think about that. People keep their money in mutual funds for years, and it takes a long time for that amount of money to double. Now, inflation is horrible, and it's only going to get worse. If you're a crypto person, you probably agree with that. Government's just we're not gonna talk politics on this channel either, but they're just churning out that money. And so eventually it's going to get to a point where mutual funds don't have enough returns to be worth it. So then what do you do? Well, maybe something like this is what you gotta do. So we're gonna be ready. And it could be entire societal collapse and none of this matters, but you might as well be prepared, right? So yeah, that's what we're doing on this channel, okay? And maybe we'll get into other things. Maybe eventually we'll do crypto news. Comment below what you would be interested in seeing. But yeah, I have spent an unbelievable amount of time, as you can imagine, testing and evaluating strategies. And this is how you do it. I'm showing you what nobody will show you. First off, nobody does this. Secondly, the people that do this don't show you because they don't want, obviously they don't want to show you this. But you guys are the gratitude gang, and this is part of my life. Why not? It's something I'm going to be doing anyway. So yeah, we will end the video there. Comment below if you liked